Hello there. In recent years, China and Russia have been at the forefront of global economic and political change, seeking to establish a new world order that doesn't rely on the dominance of the US dollar. Their bold moves to bypass the dollar have sparked significant global interest and raised questions about the future of the international financial system. While many people remain skeptical about whether their plan will succeed, there is no doubt that the actions of China and Russia will shape the direction of global trade, finance, and geopolitics for years to come. In this video, we'll take a deep dive into China and Russia's efforts to create a financial system independent of the dollar and examine the potential risks and rewards of this ambitious strategy. The dominance of the US dollar in global trade and finance has long been a source of immense power for the United States. The dollar's status as the world's primary reserve currency allows the US government to borrow at lower costs while enabling American businesses to transact globally with relative ease. The U.S. Federal Reserve's control over the global money supply and its ability to influence exchange rates through monetary policy give the United States an unprecedented level of economic influence. However, in recent years, China and Russia have grown increasingly frustrated with their reliance on the U.S. dollar and the vulnerabilities it creates in their economies. With mounting sanctions, trade wars, and the weaponization of the dollar for political leverage, both countries have taken steps to protect their financial systems and reduce their dependence on the greenback. The roots of China and Russia's pushback against the dollar. The U.S. dollar's dominance can be traced back to the Bretton Woods system of the mid-20th century. Established in 1944, Bretton Woods created a fixed exchange rate system where the value of other currencies was pegged to the U.S. dollar, which in turn was backed by gold. This system was designed to create stability in the post-World War II economy, but it ultimately cemented the dollar's role as the world's reserve currency. As the global economy grew, so did the use of the dollar in international trade and finance. Today, the dollar accounts for approximately 60% of global foreign exchange reserves, and it is used in the majority of international transactions. For China and Russia, however, the dollar's dominance has become a double-edged sword. On the one hand, they both benefit from participating in a global system that relies on the dollar for trade. On the other hand, they are also vulnerable to U.S. economic policies, particularly when it comes to sanctions. For instance, in 2014, the United States imposed harsh sanctions on Russia in response to its annexation of Crimea. These sanctions froze Russian assets and restricted its ability to access global financial markets. In addition, the U.S. has increasingly used the dollar as a tool of geopolitical influence, freezing foreign reserves and cutting off trade with adversaries. This has caused China and Russia to reevaluate their dependence on the dollar and consider alternatives that would shield them from future economic pressures. China's strategy to bypass the dollar. China's ambitions to challenge the dominance of the U.S. dollar are well documented. As the world's second-largest economy and a major player in international trade, China has long sought to increase the international use of its own currency, the renminbi. In 2016, the International Monetary Fund, IMF, officially included the RMB in its basket of reserve currencies, marking a significant milestone in China's efforts to internationalize the RMB. This move was a clear signal that China was ready to diversify away from the US dollar and position the RMB as a global alternative. One of China's key strategies for bypassing the dollar is the creation of alternative payment systems and trade mechanisms. The most prominent of these is the Cross-Border Interbank Payment System, CIPS, which was developed to facilitate direct transactions in RMB between China and other countries. CIPS is China's answer to the U.S.-dominated SWIFT network, which is used to process the majority of international payments. By offering an alternative to SWIFT, CIPS allows Chinese banks and businesses to conduct cross-border transactions without relying on the dollar or the U.S. controlled financial infrastructure. In addition to CIPS, China has also been actively promoting the use of the RMB in trade agreements and international settlements. For example, China has signed numerous bilateral trade agreements with countries around the world that allow for the use of RMB in transactions, bypassing the dollar altogether. These agreements are particularly important in regions like Africa, Asia, and Latin America, where China has invested heavily through its Belt and Road Initiative, BRI. By encouraging the use of RMB in these regions, China is gradually building a network of trading partners that are less reliant on the dollar. Furthermore, China has been increasing its gold reserves, positioning itself as a global leader in precious metals. As a hedge against the volatility of the dollar, China has been stockpiling gold in an effort to secure its financial stability and reduce its exposure to U.S. economic policies. This move aligns with China's broader strategy to shift away from the dollar and create a more balanced global financial system. Russia's role in the plan to bypass the dollar. Russia's efforts to reduce its reliance on the dollar are closely aligned with China's goals, but they also reflect Russia's unique geopolitical concerns. As a major energy producer and exporter, Russia has long been vulnerable to fluctuations in global oil prices and the strength of the U.S. dollar. The price of oil is traditionally denominated in dollars, and Russia has been exposed to the risks of currency devaluation and exchange rate volatility. This reliance on the dollar has also made Russia a target for U.S. sanctions, which have affected its ability to trade and access international markets. In response to these challenges, Russia has been taking steps to diversify its financial system and reduce its exposure to the dollar. One of the key initiatives is Russia's push to create a more robust and independent financial infrastructure. In 2014, Russia developed its own payment system, the System for Transfer of Financial Messages, SPFS, which serves as an alternative to SWIFT. While the SPFS is still in its early stages and is not yet as widely used as SWIFT, it represents an important step in Russia's efforts to reduce its dependence on U.S.-dominated financial systems. Russia has also been increasing its foreign currency reserves in gold and other assets, much like China. The Russian central bank has been buying gold at a rapid pace, aiming to build a reserve that can be used in the event of economic or financial disruptions. This strategy is designed to protect Russia's financial sovereignty and reduce its reliance on the dollar and other Western currencies. In addition, Russia has been promoting the use of its own currency, the ruble, in international trade. One notable example is Russia's efforts to sell oil and natural gas in rubles to countries like China and India. By moving away from the dollar in energy transactions, Russia is not only protecting its own economy from fluctuations in the dollar, but also sending a message to the world that it is serious about de-dollarization. This strategy is in line with Russia's broader goal of creating an alternative financial system that operates outside of U.S. control. Challenges and risks to China and Russia's plan. While China and Russia's efforts to bypass the dollar are ambitious, they are not without challenges and risks. One of the biggest obstacles is the sheer dominance of the U.S. dollar in global trade and finance. The dollar's status as the world's reserve currency is supported by decades of history, and it is deeply entrenched in global financial systems. As a result, any attempt to dethrone the dollar would require a massive shift in global economic behavior and the willingness of other countries to embrace alternative currencies. Moreover, the financial infrastructure required to support alternatives to the dollar is still in its infancy. While China's CIPES and Russia's SPFS are important steps in creating independent payment systems, they are not yet as widely adopted as SWIFT or other Western-backed systems. For these alternative systems to succeed, they would need to gain broader acceptance among international businesses and financial institutions, which could take years or even decades. Another challenge is the geopolitical dynamics at play. While China and Russia are both motivated to reduce their reliance on the dollar, they have very different interests and priorities. China's economic growth and stability are closely tied to its relationship with the global financial system, while Russia's efforts to bypass the dollar are driven more by political and security concerns. These differences could make it difficult for China and Russia to maintain a united front in their efforts to challenge the dollar's dominance. Finally, there is the issue of trust. The global financial system is built on trust, and the US dollar has enjoyed this trust for decades. For countries to shift away from the dollar, they would need to have confidence in alternative currencies and payment systems. Given the political and economic uncertainties surrounding China and Russia, it remains to be seen whether countries will be willing to take the risk of abandoning the dollar for these alternatives. Conclusion: will China and Russia's plan work? The secret plan by China and Russia to bypass the US dollar is an ambitious and bold move, but its success is far from guaranteed. Both countries are making significant strides toward reducing their reliance on the dollar and creating alternative financial systems, but they face numerous challenges in achieving their goals. The dominance of the dollar, the geopolitical complexities, and the trust issues surrounding alternative currencies and payment systems all present significant hurdles that China and Russia must overcome. However, if China and Russia are successful in creating a viable alternative to the dollar, it could mark a turning point in global finance and geopolitics. A world where the dollar is no longer the dominant currency would fundamentally alter the dynamics of global trade, finance, and political power. While this shift may not happen overnight, the efforts of China and Russia to bypass the dollar are already reshaping the future of the global economy. Whether their plan will ultimately succeed remains to be seen. But one thing is clear: China and Russia are determined to challenge the status quo, and their actions will have lasting consequences for the world.